Hello there, this is James and you're watching Tixee Live. In fact, you're watching Tixee Live presents hashtag Ask James. Ask James. Now, these are the videos where you send in a topic of your choice and we dedicate a whole video just to that topic. And today's topic has been sent in by AJ Davis, and today's topic is Introduction to Candlesticks. But before we get into it, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. Today's episode. Thank you very much. Hello, how are you, my friend? I hope you're good. Hope you're having a very good. Hope you're having a good day. And thank you for your real kind words. I really appreciate it. Thank you. I really do. Okay, so today, like I say, it's hashtag Ask James, the second episode in a brand new series. And today's topic is indeed an introduction to candlesticks. I say it's only an introduction because you could do a whole webinar, hour-long episode on candlesticks. But these are little bite-sized pieces. But okay, it's going to be an introduction to candlesticks, their benefits, their disadvantages, and how you can use them in your day-to-day trading. Again, I have a big shout out and a big thanks to Jay Davis for making this suggestion. And don't forget, this video or this series in particular is very reliant on you good people. I need your ideas. I need your topics on what you want me to do. So a big thank out to Jay Davis, who came up with this topic today of candlesticks. And I'm looking forward to doing it. I really am, because like I say, I'm a big fan of candlestick charts. I really do. And because I really think if you look at them properly and you treat them in a certain way, they can really light up your view of the market. So anyway, let's get started. Let's go into it in a bit more detail. A bit more detail on this, so we can have a bit more of an understanding. Yeah, that's a better view, isn't it? So okay, like I say, this is an introduction to candlesticks. Okay, now what are candlesticks? Now, a candlestick chart is a very simple method of displaying price information in a market. Unlike other charts, such as a line chart, okay, candlestick charts gives you a number of key data points in a visual form in a set period of time. Okay, in a set period of time. And I will explain what I mean by a set period of time. These data points, the candlesticks can give you is opening price of an asset, the highest price of an asset in that given period of time, and the lowest price, and of course the closing price. Okay, let me explain this in a bit more detail. This is what candlesticks tend to look like, as an example. Okay, obviously you can choose the colors you want, any color you want, but usually the customization of candlesticks usually is green is for candles which close higher, and red are for candles who close lower. Let me explain. Okay, so just assume on this little picture I have here, okay, that the green candle is bullish and the red candle is bearish. This is what the information this candlestick can show you, okay? It's depending on your period of time you choose, be it 5 minutes or an hour to a day, that candle represents, okay, either a whole day, a whole 5 minutes, or all 30 minutes, a period of time of that asset, whatever you choose, okay? So say, for example, I've chosen 30 minutes. So this candle's showing me that in that 30 minutes, this here, which is known as the body of the candle, the bottom of the body, is where that asset opened in that 30 minutes. The top of the body of the candle here, that top line is here, okay, shows me where it closed in that 30 minutes. The long lines above it and below it, okay, they're called wicks. This shows me the highest point that asset went to in that period of time and the lowest point of where that asset went to in that period of time. Okay. If it's a bearish candle, the top of the body, the top of the box, the top of the body will show me where it opened in the period of time, and the bottom of the body will show me where it closed in that period of time. So say 30 minutes, it will show me where the asset opened at that period of time and where it closed at that period of time. And again, the wicks, the long lines at the bottom, the low and the high, will show me where the highest level the asset went to in the highest period of time. In that period of time, the highest price it went to in that period of time, and then the lowest price that asset went to in that period of time. Okay. Now, the main benefits of candlesticks, okay, is for one, they're customizable. Like I say, you can choose that candlestick to represent any period of time of your choosing. 1 minute, 5 minute, 15 minute, 30 minute, hour, 4 hour, daily, weekly, monthly. Okay. And you can use that on any asset of your choice. Okay. The other advantage, it gives you pretty much the full story. It tells you in that period of time where the asset closed, opened, the highest it went to in that period of time, the lowest price it went to in that period of time. So it gives you an awful lot of information. Okay. And it's pretty easy to understand once you get a proper grasp of it, proper understanding of it. Okay. And it's like I say, it's quite visually pleasing as well to look at, which is also a disadvantage, which we'll talk about a little bit later. Technical indicators tend to work best with candlestick charts because you can sort of see areas of interest easier with candlesticks. And plus, candlesticks are great at showing you where the potential buyers and sellers are and who is in control of the market. What do I mean by that? Is the market dominated by sellers or is the market dominated by buyers? Okay. Now, there's a lot of talk about, obviously, there are other different types of charts. There's candlestick charts, obviously, which we're talking about, but there's bar charts and line charts. Why is candlesticks better? Well, again, it is a matter of opinion. But let me show you. Let me pull up one of my charts now. Okay, for example. Okay, this is the sterling. Again, as you might have noticed, those who watch me regularly, I've got rid of all my indicators because I'm going to put them in again later. I got rid of my lines so I can illustrate what we're talking about. But this is obviously the sterling, okay, on a candlestick chart there, okay? So I have it on a 30 minutes. Okay, so that means each bar, each candle, okay, is representing 30 minutes. Okay, so as we can see, this is a red. So again, this is showing me where it opened at the beginning of that 30 minutes, and it's showing me here where it closed at that 30 minutes. The green here, again, this green candle here, okay? This is obviously a bullish candle. This is showing me where the sterling opened at the beginning of the 30 minutes, and it shows me here where it closed at the end of the 30 minutes. This long wick here, the line here, is showing me the lowest point the sterling went to in that 30 minutes of time. So again, straight away, it's giving me a lot of information. If I switch to, say, line chart, doesn't give me that information. It gives me the overall trend. It does. It gives me the overall trend or the direction of an asset, but it doesn't give me the same amount of information that the candlestick is. At the same time, if I move to, say, bar chart, which is similar, okay? Bar chart is giving me actually similar information to what a candlestick is, okay? Because instead of having like a complete box or a complete candle, this little line here, you see that little line there? It's like a signpost. That is where the sterling opened, and that is where the sterling closed. Again, the bottom of the bit shows me the low and the high. But though it is giving me very similar information to the candlestick, I find it a lot easier to read and understand the movement or the price action of an asset by looking at this. Okay, by looking at this. This is why I think candlesticks is obviously something which is preferred a lot in Forex with currency traders, because it gives you a fair bit of information, and it is pretty easy to read once you grasp the basics and the explanations of what it is. Now, there's other advantages, of course. And again, I often take this with a pinch of salt, and I put this in a little bit of the disadvantage box as well, because we will talk about the disadvantages of candlesticks as well. But the other thing is there's the patterns that people believe you can see in candlesticks. And there is a couple of patterns which you can see. And I'll go through a couple of them now. Okay. Right. One of the most popular, okay, is what's known as the shooting star. Shooting star. Okay. And the candle looks a little bit like this. It has a small body like that. small square body, and it has the long wick, long line at the top. So it looks like a hammer being dropped. They call this a shooting star. So it looks like something is shooting down. So a small body with a long line on the top. Okay, it doesn't matter what color it is either. Okay, now this pattern appears and tends to indicate a change in trend. Okay, change in trend. And it tends to only illustrate a change in trend if it appears at a top of an uptrend, a top of an uptrend. Okay, so let me give you an example. Let me show you an example. Okay, this is the sterling again. Again, I'm going to put it on a daily because I tend to look at a lot of daily charts because that sort of gives me a stronger indication of certain things. Okay, so let's have a look here. Okay, we have a shooting star. Again, it's got to appear at the top of an uptrend for it to indicate a reversal. And as you can see, this is on a daily. The sterling was rising, uptrend, shooting star, and then it reversed. Okay. Again, you can have a shooting star at the bottom of a downtrend, and again, it does the same thing. It reverses and starts to move back up. But that's what you need to see. It needs to appear either at the top of an uptrend or bottom of a downtrend for it to really indicate a change in tide. Okay, a change in trend. Okay, so that's one example of a shooting star. If we look at another pattern, okay, the three white soldiers. Again, this has to appear at a bottom or around a downtrend movement. Okay, a downtrend movement for it to work. So if you've got a downtrend, and you suddenly see three white soldiers, so basically, if you look at the illustration we have here, we have one small bullish candle, then a slightly bigger bullish candle, and then a bigger bullish candle. That then indicates the change in direction. Okay, a change in direction. Let me give you another example here. Again, keeping with the sterling. Okay, so here we see here, look, we have a downtrend. Remember, this is on a daily. Okay, so daily chart, because I prefer to look at daily charts. Enjoying. I hope you're enjoying it. I hope you're finding it useful as well, my friend. I hope you are finding it interesting and hope it helps. But thank you for the nice comment. Thank you. I really appreciate it. Okay, so this again. So looking at the chart here, we have downtrend. Okay, and then one small candle, a bigger bullish candle, and then we've had a change in reversal in direction. So an uptrend. Okay, an uptrend. So that's the three right soldiers. Okay, now there's one more one which we're going to look at. Okay, and that is the bearish engulfing candle. You also have at the same time, you have what's known as the bullish engulfing candle. This is when a candle suddenly, basically, you've got a certain direction, and it suddenly engulfs it, as in so much bigger, okay, than it is, and it changes the direction, indicates a bearish engulfing candle, indicates a downtrend. And I can show you one here. Again, I've got another example ready. Look, okay, sideways, but then we have this big bearish engulfing candle, and guess what? Downtrend. Okay, this is before we get the three white soldiers. So that's another one. You do get the reversal one where you get a downtrend and then a bullish engulfing candle, which then indicates again a change in direction. So yeah, that's one of the advantages again of candlesticks. But again, I will talk more about these patterns and when I discuss the disadvantages, because I think sometimes people look too much into them and try and look for them and identify them when they're not really there. And maybe sometimes people rely too much on them, because I think there's a lot more to it than there's simply looking at candlestick patterns for doing it. And then, I mean, there's a lot of theories of candlesticks. I mean, one of the other theories, which is I'm not a big fan of, okay, is the long wick theory. And the theory goes a little bit like this. I'll pull up my chart to show you. Again, you only really tend to see this on shorter time frame charts. Okay, let me show you, find an example for you of a long wick theory. Okay, so basically, if you have a real sharp movement in the market, okay, like, okay, it is a bit of a sharp movement in the market. As you can see, okay, we've got, this is 15 minutes. I don't like short time frame, but again, it's just down to my personal trading style. But anyway, as you can say, look, we've got the sterling on the move here, okay? And then it gets to here and we have a long spike up. See, a long wick, okay? A long wick. That means, that's explaining to me, okay, well, that's showing that the bulls tried to push the market higher. And as it spiked a bit higher, the bears said, oh, no, 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 no. No, 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 no. Because it wasn't strong enough to close. It closed here, okay? Closed here, sorry. It didn't close here, so that there wasn't enough power with the bulls. So then it reversed downwards. Okay, that's the theory. So when you see a long wick, means there's not enough either direction as well, as the bottom. That means there's not enough either sellers or buyers to maintain the momentum. It means it's going to reverse its direction. Again, I think, in my personal opinion, I'm not a big fan of this theory, because I think it's too easy to manipulate, if you know what I mean. It's too easy to misread it and not actually understand what is actually causing the action or the asset to move. So I'm not a big fan of the long wick theory. Where's my mouse? Here it is. Okay. What else though? Trend lines. Okay. Again, I like using, and I probably will do a video. If somebody wants me to do a topic on trend lines, I'll do a topic on trend lines anytime. But I said the other reason why I quite like candlesticks is that it's easier to just do certain trend lines. Okay. Let me show you, for example. Okay. If I pull up my chart again. All right. So let's go back to a daily again, because I like looking at longer time frames to ascertain a direction of something. Okay. This is quite good. This is quite a good example. So let's change the chart now to line. Okay, it shows me a downward trajectory. Okay, but it's not showing me any area of interest or potential resistance or support. It's the same if I change it to, say, a bar chart. Again, okay, it's giving me enough information, but again, it's a bit more difficult to read. If I switch it to a candlestick, okay, easy. I can visually quick look at it and go from here, connect it to the lows, and I've got a nice potential trend line here. So I know then potentially, if we're get back up again and get some bullish momentum, this could be where the trend line is, a potential area of interest. So that's why I quite like it. It's quite good with trend lines like that. If we go and have a look as another example, the dollar yen, for example. Can you please do a one on trend lines when I see your chart? Yeah, I know I've removed all my trend lines today. All my lines I usually have removed it to make it a bit more easier to see. But yeah, if you want an episode on trend lines, by all means, I will do one. And my indicators. Okay, because there's a lot. I use quite a few bit, but yeah, absolutely, I'll take that on board, definitely. Okay, so say for example, here. Okay, let's delete this. So if I do change my chart to a line, okay, I can see roughly what the trend is, by all means. Of course I can, but it's not really giving me potential area of interest. If I change it again back to candle, okay, again, don't forget this is a daily. I can then sort of do, it's a bit too sharp to be honest to be a real good trend line, but let's try that again. Delete that. Let's try it again. Connect that. Yeah, connect. There you go. Yeah. Again, so now it's giving me a potential area of interest if the dollar started to fall down again around here. Okay, that's the area. This here, this triangle bit here, the trend like this. So yeah, that's again another reason why I like candlesticks a lot as well. Because again, once you get used to it, you can see a lot of things in them. You can see a lot of things in them. The other thing is indicators. Indicators, like I said, the advantages. Indicators, you can use them quite a fair bit. Again, so for example, let's do switch back to a line. Okay, I want to put in, say, insert. Let's do for example, Bollinger Bands. Okay. Right, those of you who don't know Bollinger Bands, the theory is they measure volatility. So the wider the bands, the more volatile the market is. The closer the bands are, the less volatile it is. Plus the theory is if it hits the top band, it may start being sold off again. If it hits the bottom band, it might start buying again. But again, that looks like a Jackson Pollock painting, doesn't it? So it's not necessarily that easy to read. So if we did delete that, let's go back to Candlestick. Let's put Bollinger Bands in now. Again now. Let's actually just change the pair. Let's go to the sterling again. Let's change the pair. So let's put Bollinger Bands in again. Trend, because it's a trending indicator. Okay. Yeah, right. There we go. We can see now that every time, for example, when it was on an uptrend, every time it touched the top band, we can visually see it now. Visually see it a lot easier than we could on the line. We easily see that that's where the market started to sell in again. When it hit the middle band, which is one of the other theories, when it hits the middle band, the market might start jumping in and buying again. We can visually see it. That's where the market started buying in. We know the sterling's on a serious downtrend at the moment. It's under a lot of pressure. As we can see at the moment, currently that bottom band is holding it. So that's another advantage of candlesticks. Again, it gives you that slight easier way of looking at it. You can't see my chart. Can anybody else see? Oh, do you know what? You're absolutely right. Because I forgot to put it in, didn't I? Sorry, guys. Sorry, my absolute fault. I was too busy wrapped into what I was talking about. Absolutely right. Absolutely right. Let me do that bit again. Again, thank you very much for pointing that out. My mistake. I got too caught up in way. Like I said, this is going with the indicators again. Okay, so this is the line chart. All right. So if I want to put in the Bollinger Bands, okay, as indicator trend, Bollinger Bands. Okay, it doesn't give me an awful lot of information. Okay, it shows me obviously that it's very volatile at the moment. It's on a downtrend, but it doesn't show me exactly where that is. But if I then change it to Candlestick again, it shows me a lot more. Okay, it shows me here. Okay, that obviously this again is on a daily. Don't forget. Yeah. And there's too many screens. My mistake. My bad. My apologies. As it was on a move, as you can say, yeah, the theory is if it hits the top of the Bollinger Band, it will start being sold off, so we can start seeing it visually clearly. If it hits the middle band, the market might start buying in again. And obviously, as we know, it's on a downtrend. And we can see at the moment, every time it's touching the band at the moment, the market is supporting it. So again, we can see this a lot more clearly with candlesticks. Okay, so that's another advantage. Another advantage. Oh, come on. There we go. It's better. And again, it's the same with anything. With moving averages as well. Moving averages is another thing. So let's put a moving. Let's go back to line. Okay, so this is the line chart. Let's insert moving averages. Standard moving average. There we go. Moving average. Now let's do a 50. Okay. Okay, illustrating it's on a downtrend. We know this. We can see it for ourselves. It's on a downtrend, but it's not giving us anything else. If we go to candlesticks again, okay. Now again, it's showing us it's on a downtrend, but it's also showing us a potential resistance as well, because when it's reached there, it starts to be sold off again. Okay. At the same time, it showed us a potential support when it was above it. So again, we can see it a lot more clearly, a lot more visually pleasing, and a lot more easier to see it. Okay. So anyway, that's again one of the advantages of of candlesticks. Okay, it gives you so much information. The other thing I really like about it, and I'm not going to make the mistake this time and take my chart off and keep my chart on, so I don't make the mistake again of forgetting to put it back on, is price action. You can see a lot of price action in it. What I mean by that, you can see potentially by having a quick look at it, where potential buyers and potential sellers are. So again, this is the other reason why I like using candlesticks. Let me give you an example again of this. This is gold. Okay, and remember, this is on a daily. I like using dailies. Okay, because daily can give me a lot of information. If I move out a bit, so we can see it a bit more clearly. Right. Okay. So straight away, okay, I can see now that obviously gold is on a downtrend, But you see this area here, this is on a daily. I can see by just looking at it, that at one point there was a lot of buyers here supporting that area. So that's there's a potential buyer. So basically that was a support for a bit. And as you can see, buyers were there. See, that was a resistance, then became a support. As you can see on a daily, market started buying in there. So this is why I then looked at it again and said, okay, this could be potential support. No, it's not a support. It got broke. But support changes its roles to resistance, and that's a potential resistance. There's a potential area of interest as a resistance. Again, you can see this really, really easy with candlesticks. And if I have a look here, again, there's another area of interest. Here, this is what was holding the market up. There was a lot of buyers here at some point, buyer there, then it eventually got broke, then it became a resistance. So here now is another area for me to keep an eye on for a potential resistance in the future when gold gets its bullish momentum back. So again, using candlesticks, you can see by looking at it, you can see potential areas where buyers and sellers are. So this is another advantage of candlesticks. But like I say, nothing always works. Nothing always works all the time. Okay, you got to use it sparingly. Okay, you got to take in other accounts like market sentiment, other things like that. Now, there is disadvantages to candlesticks as well, which I'm going to go through now. Okay, first of all, they can be too noisy. There is a lot of information going on. Yes, it's great giving you all that information. It's really excellent having all that information, but it can be too noisy. It can be too visually stimulating. For example, if you have a sudden move in the market and you're not aware of what's causing it, you can suddenly see a candle drop like that, and it could make you lose your focus. You could then get too emotional and accidentally jump into the market too dramatically. We're not even grasping what's causing it. Okay, so it can be, far too noisy. It can be far too stimulating for your mind, which will make you make decisions which are wrong. The other thing which is a disadvantage of candlesticks is sometimes gives you a false illusion. Because it's so visual and because there is so many different candlestick patterns, our mind looks for them and we make up a pattern even though it's not there. So our mind plays tricks on us because, again, it's so visually with that. The other thing, the other problem with it, there's no explanation of what causes the movements. So like I just said, my example I said earlier on, when the market suddenly drops really dramatically, it's not explaining to us what's going on. It could be breaking news, for example. We need, like I said, I'm a big fan of understanding what's driving the market and what's giving an asset an intrinsic value as well as technical. So again, it doesn't give us that information either. And like I say, it really goes back to my main point. Why is it a disadvantage? It's too noisy and it could drive our emotions too dramatically, make us make mistakes because it is so overstimulating. That is another massive problem with it. Anywho, that, like I say, it's a brief introduction. I could do a whole massive webinar on this. There's so many different patterns. With so many different names, like spinning top. My favorite one, the name is called the abandoned baby, of all things. There's a pattern called the abandoned baby. There's so many patterns. There's so many different advantages of looking at it and, how you can read them. And like I say, once you understand them, long as you can control your emotions with it at the same time, and you don't let candlesticks dominate your decisions. You use them instead to help you with your trading decisions instead of basing your trading decisions on candlesticks alone, then yeah, they can be a great asset to you. And like I said, I'll probably do a whole blown episode on this at some point in the future. Anywho, big thank you to Jay Davis for this topic suggestion. I hope everybody found it interesting and useful. Like I say, it's only really an introduction to it. It's only a beginning. I could do a full-blown episode which will go on for like an hour or so, but it's like a bite-sized piece today. But a big thank you for Jay Davis. And a big shout-out to SMS 790 for realizing I had forgotten to put my charts back on the screen. So I thank you for that. My mistake. Thank you. But anyway, guys, if you have any ideas for any other topics you want me to cover in the future, I got a suggestion here about trend lines, which I will look at doing a topic on trend lines as well. But if there's any other sort of topics you want me to cover, or any other aspects, maybe even fundamental questions, explaining some, why these events drive the market, whatever it is, whatever you want, it's your suggestion. Simply put in the comment section, #AskJames, and the topic of your choice, or put it on the comments here while I'm live on air, or on Facebook. It's however you wish to communicate, and let me know. But please, I need you guys. I need your guys' ideas. I need your guys' topics. I need to know what you guys are interested in learning. So please let me know. And don't forget, you can ask me questions anytime you wish, whenever I'm online. Okie doke. But anyway, big shout out to everybody who's come along and watched me today. I really appreciate it. I really appreciate all the interaction as well. Thank you very much for the nice comments I had at the very beginning. And SMF 790, thank you for identifying the mistake I made. I really appreciate that with not showing my charts. Got carried away. But anyway, if there is no questions at the moment, not to worry. Don't forget, if you think of a question later, you can put it in the comment section on either Facebook or YouTube. I will see them and I will reply to them next time I'm online, which of course will be actually in 1 hour's time. I'll be back on again, but this time I'll be covering the US session and what's happened in the markets since this morning. We'll have a look at the pound sterling, which is still getting absolutely hammered. But anyway. Oh, thank you very much. Very clear and made it understand. Brilliant. That's all I want. As long as it's clear and understandable, I've tried to make it as understandable as possible. I try not to make it overly complicated, because there's an old saying, people who make things overcomplicated, they don't understand it themselves. So no, thank you. I'm glad you understood it and it was clear. Thank you. I appreciate that comment. Anyway, till next time, which will be in 1 hour's time. Don't forget, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, by all means, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and found it useful and interesting, and you put up with me, because I know I'm a bit too enthusiastic at times, give me one of these. It's nice to know that you like what I do. I can see I've got a couple of likes, quite a few likes already, actually, which I really appreciate. Thank you for that. I really do. And I really appreciate everybody taking the time out to come along and join me today. I really do. Thank you for that. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.